A higher credit limit can help your score, but only if you do it right. A credit limit increase is a tool, not extra money, and issuers approve it for their benefit. They want customers who spend, but also look low risk, so your usage and payment history matter more than your request speech. The big win is utilization. If you owe $500 on a $1,000 limit, that's 50%, but on $5,000 it's 10%. Timing can mislead because scores react after statements report, and bigger limits raise overspending risk. Even when approved, score gains aren't instant. Before you ask, make your account look like the safest possible bet to the issuer. Start with on-time payments, because one late payment can outweigh months of good behavior. Then pay balances down before the statement closing date, since that's usually what gets reported to credit bureaus. Know your current limit so your request is realistic, and check whether the account must be open a certain number of months first. Update income information if it changed, and set autopay for at least the minimum to avoid accidents. There are two paths. Wait for an automatic increase or request one, and the right choice depends on speed and control. Auto increases tend to happen after consistent, responsible use, but they can be slow and unpredictable. If you need a higher limit soon for a large purchase or lower utilization, requesting is faster, and online is usually the simplest. Calling helps when you need to explain income, limits across accounts, or timing. Always ask whether it's a hard pull, and choose an amount you can justify. The fastest way to get approved is to ask for a number that matches your profile and removes red flags. A credible request ties back to income. Issuers won't usually give very high limits relative to what you say you earn. They also like to see usage, meaning you actually swipe the card, but without carrying debt month to month. Time your request before the statement closes so your current balance reports low, and confirm whether the review is a soft or hard credit pull. Recent risk flags: high balances, many new accounts, or missed payments can derail you. After the decision, treat the new limit like a safety rail, not permission to spend more. If you're approved, but for less than you wanted, ask when you can request again and what would improve the outcome. If you're denied, read the adverse action reasons. Those are the exact factors to fix, like high utilization or too many recent inquiries. Too many requests can backfire by signaling stress, so space them out. And never accept a hard pull surprise. Confirm first. Once your limit rises, keep spending steady and pay it off. If your statement reports 50 utilization, a limit increase can drop it to 10% with the same balance. CreditCardAgent shows which cards fit how you actually spend and estimates the real yearly dollar impact versus your current setup. Free, about 3 minutes. No login or credit check. Links in the description.